following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. We're taking a look at crude really quick. Talked about yesterday having a little bit of a place to play defense down here on the September contract, new profile. Had that hint of a new profile, possible chance to look at some movement back up into the top of the fair auction. Doesn't have to go there immediately. 43.33 top of the box and 39.71 down below. Had a decent little move up yesterday. We're going to check out some XLE stocks and see how things worked out relative to that move up in crude oil. Some of the stocks that were showing some strength ahead of time. And interesting time of the year around here locally. Got a nice little subsistence farm going. This has been going on forever, but these tomatoes. But I wanted to show you something. These are coming in buckets, if you can see this. Kind of I don't know if Larry's got a beat on grape futures, but it's a cool time of year. Always get these. If you guys never have a fresh fig, these are one of the coolest things in the world to me. So, just showing you what's happening around here. Actually, these are coming in too. I brought a bunch of these. The apples, it's amazing everything hitting at one time around here. Let's take a look at gold. And it's been crazy. I'll show you some other photos here. This is these kind of come in a certain time, but they continue to show a bounty. A lot of these things are still, it was a really wet year around here, so some things are still kind of hanging on, but it's been a cool year for gardening. Taking a look at gold, we've got a big report coming out today. Obviously in, what is this, 22 minutes. I don't, okay, so this is the good news. You got that 1366 on the December contract sitting there, 1366.7. I don't know if Nico and Paige are approving this in the Primal Lifestyle, but I sure love it when all this stuff comes in. Here's the shorter term numbers. I mean, this is 1374 up top on the daily, 1347.8 down below on the daily, on the bottom of the box there. Really thin profile appearing on the daily. So, how do you trade this? Anything can happen with these reports. You guys know that. If you want to roll the dice, I'd just really be leveraged towards the long side. But again, these reports cause some herky-jerky type movements to usually kind of get some people out. So there's a couple of strategies here. You could have some resting orders, in my opinion, down at 1347.48. That would be kind of that, let's just kind of stop some folks out first before we go north move. It's pretty far down there, actually, 1347.48. That's intermediate support. And flat out breakouts above 67 into 74, probably going to have to be bought here. So that's the situation on gold right before the report. The notes, here's where we're at. So we closed above profiles again on the intermediate, and we're trading about 133 right now. So, I don't know. I literally don't know what type of information in this report could cause them to really step off the gas pedal on the rhetoric, saying what they've continued to say over time. And somebody coined it yesterday, the game continues, or whatever they said. I mean, you know, you got the arbitrage situation going on globally as far as rates going sub-zero. So, you know, the 10-year's got a lot of things in its favor to continue to head north here. And I know that may not seem sensical. You know, I've been listening to some of the other hosts on TFNN. This, you know, ultimately could end very badly. But, again, you've got to just look at it and take it for what it's worth. And there's a bid in the treasuries, period. So that's the deal. The dollar, here's the big inflection points on the dollar for the report. We're kind of smack dab in the middle of a daily profile here. 95.20 down below, 95.98 up top. Remember, it's Friday. The report's going to come out. Some people are going to adjust positions, and there's going to be some big desks with quite a bit of leverage shoving some people out of some trades first before the market goes the correct way. So just keep that in mind. Trust me on that one. The S&Ps, you know, we've had a little bit of a mixed bag here on the internals, but again, you know, this report kind of overrides a lot of that. You know, getting things out of the way sometimes, just getting reports out of the way sometimes is a relief to the market in general. I don't think rates are going to rise anytime soon. Market loves that situation. But again, the internals have kind of started showing some cracks in the armor here. And the inflection points, as weak as they are, 2169, 2170 up top, 2152 down below. And I don't think you should trade this before the report. All right, so hitting a couple of the usual suspects. We're going to hit silver really quick, really quick here. Don't know how much of a reaction this is going to be, but you've got 20.0203 down below and 20.70 up top on silver. Again, I think you got to be buying 20.02, 20.03 on silver. And again, trying to block out the short side on silver and gold because, you know, the long-term trend is up. We talked about that the other day. Trying to block out one side of the marketplace, this helps me block out the short side. Now, again, you know, there's different time frames to trade on. So, you know, short-term guys may see some opportunities on the you know, the contra trade against the long-term trend, but I'd rather trade with the trend personally. So I'm, again, continuing to block out on silver and gold, the short side, trying to buy support, buy breakouts, and just keeping it simple, keeping it real. All right. Before we go to break, let's hit the Brexit scene. This is something, you know, again, had a daily profile appear yesterday. You've got massive support, 130.19 into 130.89 now on the long-term trade for a bounce up possibly. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So we're looking at the British pound, looking at it's kind of held up relatively well. You knew some measures were going to be talked about and employed by Great Britain. Really like how it's held up, like how it's stayed above that launch pad area before the report. And again, you know, this is a good case of just kind of being patient, wait till things happen and wait till the market comes to you and wait till we arrive at high probability areas. This is a great little line in the sand here. And again, you can save yourself some bucks here, just kind of, you know, okay, this thing's acted pretty well, but anything can happen. And now it's actually, in my opinion, showing itself that 130.19, 130.89, that general collection area is pretty solid when it comes to the pound being sound. And being able to kind of weather the storm of innovative measures, as they like to call them these days. A very nice way of saying printing money. So here's the yen. This is, again, we've talked about this. This is starting to look a little scary here for a flush. And I've mentioned that, you know, we really want to get away from these areas. You know, we kind of broke the spine here on consolidating up here at the 107 and some change area, getting below this 105, and that was disturbing to me. But you know, when you come down, you want to see these things get away from these areas as you kind of approach them, and this is just not seemingly happening here. And sometimes you have to change your tone here, and we could actually see a move down below these weekly unfair lows on the yen, 124.28. And again, just kind of looking at it for what it's worth. A lot of times you'll have to change your tone on something, and this is kind of one of them. It's just kind of a wait and see. I don't know if buying the 125 now is going to be a decent deal, considering, you know, this type of action down here starting to form. Australian dollar really looking solid now, starting to move up again. We've talked about the initial targets on the intermediate, 76.76. Trying not to get shaken out of the trade. There's no free lunch. It's not going to just kind of gradually move up, and you know, there's somebody holding a sign going, "Get in the water. It's okay. We're going to be fine." It's always going to be in my opinion, ups and downs. So as we kind of take that into consideration, we're starting to reach a first inflection point. Next one up, I'm seriously interested in meeting 77.46. And if we can get a weekly close above there, then it's going to be full on again to start looking at this from the long side above there. But right now, it's kind of acting well. It's doing what it's supposed to. Again, no free lunch. There's been some volatility here, but trying to stay with the long-term MO of the Aussie dollar moving up. Okay, NVO. Let's take a look at that one. Somebody's asking about it in the den. Nobody cares about my fruit harvest. Here we go. So it looks like we're printing about 50.18 this morning. Here's the weekly. So 50.18's down here. And let's just kind of keep walking through the process here. Here's the daily. I mean, I guess the question is do you try to pick this up on sale down here? Yeah, it's a dangerous situation. I've destroyed my entire month before getting involved with something like this and trying to think something was on sale and then doubling down and trying to play around with the volatility. I think it's just something you just got to stay away from. I mean, there's better things out there that don't have the insanity of an earnings report thrown into it. If that makes sense for us, it's if you're in it long beforehand, sometimes it's, again, this is another angle. Sometimes it's good just to clear your head, not double down on it, not try to catch it back. And sometimes it feels better just to get out of something if you're long. I don't know if you're long or not, but that's my take on it. I hate playing around with things before earnings. This can happen. This is, again, I'm telling you this from experience. For me, it's not worth it to kind of play around with these things before earnings. But some people want the action. Some people want the juice. So, yeah, I mean, there's better things out there to put mental capital towards. Sometimes when you get mentally involved with these things too, and I'm just going to continue a little bit, they wear you out, and then that causes you to sometimes, even if you start taking a hit on something like that more than almost abnormally, a lot of times it'll affect your judgment moving forward. You guys know this if you've been doing this for a while. You try to make it back doing something else, maybe slightly less riskier, but in another area, and then your whole game plan. Remember, folks, these automated systems that are out there, they have defined things that they go by. And, if your system that you trade on every day is, I'm going to do this, I'm going to do this, I'm going to do this, this is my risk-reward ratios. When you start, sometimes you definitely want to, play around with your position sizing when the odds are higher, maybe tighten up the stops, things like that. But when you throw in these outliers of earnings, volatility and trying to catch a falling sword and things like that, it really can do two things. It messes with your head for one thing, and the other thing is it also kind of takes your so-called system and throws it out the window, and then you literally don't have a system anymore. So just to put some dark clouds over everybody's head on a Friday here. So that's my take on it. I personally, I can't deal with, Kramer, the guy seems to love to trade before earnings, and then he walks away from everybody if it doesn't work out and never mentions it again. But we're not going to do that on this show. We try to talk about our winners and losers. I think, if I don't do a good job at that, let me know. But I sometimes, from a non-sales standpoint, I just like to talk about the losers. So there we go. The mental capital thing is the one that wears me out more than anything. If I have to really devote a lot of mental energy towards something, it really affects everything in my book. So I like it to be boring. I've talked about that a lot. The only reason, in my opinion, I'm sitting in front of this machine or you're sitting in front of this machine is to make money. It's not to get excited and try to, use it as a one of these things. So again, it's a business. If you treat it like a business, think about, would you put your own business, a non-trading business, at super risk at any time? It's not a smart thing to do. I've definitely made mistakes and tried to learn from them along those. And a lot of the people on this network really are trying to let you know from their own experience what not to do. So we'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So gold has pulled back right to 1347. That's where we talked about that inflection point was. That's why we talked about having a resting order there. And we're starting to bounce a little bit here, as you can see. This is why, again, it's good to wait. Man, that's beautiful, huh? Beautiful. All right, so let's take a look at the notes here. And gold has bounced $12 an ounce right off of there. So the notes are coming off. Let's just go down the list here. This is eSignal's real-time feed. S&P's not rallying too much here, staying within the fair auction. Crude, This was a nice scene here. Where's the low tick there? 1347.1. So again, pays to be patient, pays to wait till after these announcements, pays to wait until we get into some kind of high probability area. And 1347 was kind of nice there on gold. And again, you know, we're taking a look at this, and you know, is it easier to try to get long the notes? Is it easier to short the S&Ps? You know, the gold trade, as again, was something I was a little focused on for focusing on that inflection point more than anything because of the possible Hercules reactions here. But it's nice that gold's found some support here. May not hold up, but gave you a little trading opportunity there. And notes, labor force participation. 255 is the number, obviously. Notes are selling off a little bit, but you know, nothing to write home about. Again, I think people are terrified to short this thing. Reason being that arbitrage situation across the globe, and then God knows when they'll raise rates again. 2025, maybe. So the S&Ps, you got that number up top. We talked about 28 or 2168 and 2169. We've kind of gotten through the report. We've hit a high of 2168 already. And no big surprises here. Just kind of walking through the numbers for you. So 240 unfair highs, daily unfair highs, thin box, still staying within. Notes really not caving in that much. Gold holding up. I've said this about 20 times, but, you know, again, trying to block out the short side and find support where you can. You've got some at 1347. So let's take a look at some currencies based on this report. British pound settling down a little bit here. Dollars, let me see. Let me go to the dollar here really quick. Trying to cover a lot here while the thing's open. Strong dollar. Talked about not being short the dollar, so a lot of other currencies are going to be adversely reacting to that. So let's just, again, I'm trying to cover so much at the same time here. This is another thing about the yen. It's not exactly acting extremely well. It's rallying to some degree here, but again, I mean, I think this is a wait and see on the yen. The euro, my favorite short, finally coming off some here. This is a number down here, 110.97. We're at right now on the euro. New profile today. Could be a chance to pick a little battle here for a little bit of a day trade long, but again, I remember, you know, what's the trend? Where's the leverage? You want to be selling resistance and selling breakdowns on the euro, in my opinion. So I personally am going to pass on that because if we continue to go south, again, mental capital, being upset with myself, understanding, like Joey and I have talked about a lot of times, you know, which side of the market are we supposed to be on for the maximum benefit and the easier trade. That's the situation there. If you guys want me to look at anything else, throw them out in the den. That was a good NOV. That was a good question earlier. Any questions after this report, you got to throw them out there. Man, the dollar's catching a bid, huh? God, I love this gold trick. Here we go. Just trying to cover a lot of bases while this report's going on. Apple, we talked about, this wasn't anything to play around with after we had kind of breached that area. the 96.64. There's really nothing to hang on to yet to try to trade Apple again. Again, you don't have any way to play defense. So again, this has been a no trade for me. It's okay to miss some of these moves one direction. Let's take a look at Amazon. Let's take a look at silver. I haven't looked at it since the report. Amazon, you know the drill there. Let's take a look at silver. Yeah, I mean, you know, I'm a little more partial on the long side to gold than silver. I don't trade silver a lot. I don't talk about it a lot. But again, this is what stops are for. I like silver and gold from the long side. This is a pretty thin profile here in silver. I'm not trading silver, but I got to tell you, I would have gotten stopped out of that trying to pick that around the same situation as gold in that same type of guys, Russ. And again, I think this is something you could kind of play around with, getting back above 2002, 2003, but I like the gold trade a lot more. Yeah, I mean, I hate to, I hate that this, if somebody traded this off this inflection point, it didn't work out. But again, the gold trade's a little bit more I'm focused on here. Let's take a look at the S&Ps again just after this report, see how things are working out. So what's going to happen the rest of the day? I think again, the market could take this as a little bit of a relief that the number's over and out. The market could look at the notes and say, wow, rates are still low. But again, I don't think you have any leverage here on the S&Ps on a long-term situation unless you close above 2170 or close below 2152. Close, and then you're going to have to look at the internals. You don't have any real strong internals going on right now. Any big time anomalies going on. So it's just kind of a mixed bag. Excuse me, I can't say that anymore. Forced me to make a trade. I'm a little bit more short-minded on the S&Ps right now than anything else. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. This is something else I'm playing around with around here. I don't know if you see this red pepper. It's called a ghost pepper. It's sick hot. No flavor, just complete battery acid. Couple of stocks that are that had earnings yesterday we're going to take a look at. Chesapeake Energy, Kellogg, Kraft Heinz. But I want to take a look at the XLE really quick. Had a decent little move up in crude. Some of the stocks that we were looking at, the kind of strong of the strong, didn't exactly move up very well yesterday. That was unfortunate, but again, didn't move down for the most part. PSX. But if you take a look at the ETFs, this is our daily ranking. About half of them are kind of in the red as far as net profile breadth statistics. This is another thing I've kind of been looking at. Just nothing really showing that, hey, it looks like we're going to head north immediately. Here's the S&Ps again after the announcement. 2069, 2068, pretty decent resistance there. But again, short term, we are in a long-term kind of breakout situation here. But again, I'm not thinking we're going to move too much higher today. Here's the notes again, just to kind of catch you guys up. Not really coming off, sub 5%. It's too much against it to really go down. Let's take a look at beans here. We got finally back up into that area, 973.5. We've come off of it. I just don't see a lot of hope in this particular market going north right now. Dollar's going to reprice some things, obviously. Let's take a look at CHK. All right, so let's see where we're at here. Is this a real print? Yes, 516. So here's Chesapeake. Again, we're right in the middle of a fair auction here. Nothing to really, if you're looking to be long that, I guess you just need to think about stops below 4. That's kind of a longer term situation. Priceline, PCLN. Strong travel demand. That's what I want to do, is go get on a plane and go to the airports of Europe. Here we go. So after the close, 1438 pretty powerful move up. But again, hold on, guys. Again, you look at these things, you try to block out one side of the marketplace. Obviously, it's been a stock that's been relatively strong. Now you've got some decent earnings. Now what do you do with it? So if you're going to play around with this, and this is complete crack with the price of the stock and sitting in the stratosphere now, you're going to have to wait patiently, get some new profiles to appear here. There's, it's kind of like that stock before that Russ had asked about. Similar situation on the upside, can really be disturbing if it gets away from you. So watch out for trading something like that. SeaWorld. Looks like we're not printing this morning, but yesterday's last prints were 12.85. Here's the weekly on SeaWorld. Not a lot of people these days wanting to go see whales trapped in a small environment. This is not on sale, guys. In fact, you've got new resistance at 13.92. That would be hopeful, wishful thinking for that to even rally back to there. So you've got better things, again, to devote mental capital to. Let's take a look at Kellogg. Okay, so looks like yesterday's close 83.45 is where we kind of ended up. It's kind of a no trade, just kind of going through some earnings stocks. Just kind of keep you up to date here. Teva. Looks like we're printing this morning 55.10. So again, no leverage here really. XLV, nothing to do with that one. ATVI. Ended up 42.22, so pretty strong stock. Have a chance to play defense below 40 on this one. Markets could rally. They could sell off. You want to be buying the strong stocks and selling the weak stocks, in my opinion, always. KHC. Increasing dividend. Let's see here. 89.32. Looks like we're printing pre-market. So, again, just busting up through weekly unfair highs here. Now support's going to be 86.38 on KHC. That's where you're going to have to wait for some kind of pullbacks here to buy support on that. EOG. $87.25 looks like we're printing this morning. So now we're busting above weekly unfair highs. 85.12 is going to be support on it. Hopefully you can get a pullback for there for a trading opportunity. Let's retake a look at crude here. Usually it's not a situation where you want to reverse the trade when you see these yellow new profiles attempting to appear. But, we talked about being able to play defense below 39.71. I was hoping we get a little bit more of a pullback yesterday to really get in the neighborhood where it could be a really good risk reward to try to explore this fair auction up top. Again, the September contract 43.33 is the big inflection point up top on this. Let's take a look at SWHC, Smith & Wesson. Looks like closed at 29 yesterday after market. And again, I think these stocks have to be bought. You're getting a pullback into possibly 28, 24. That's the good news. Stock's been in an uptrend. That's your support on Smith & Wesson. Guys, we're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Here's a picture of another fruit I grow around here. It's they're called damson plums, kind of an heirloom, kind of old school. Not the sweetest thing in the world. Awesome for making jam. Let's see. This is another picture. You know, I took a ride down east. This is saltwater. Some of the coolest scenery in eastern North Carolina. Nobody around that sound area. Stuff like this. Stuff Jay, I'm sure, sees all the time. Just some cool areas. Not populated. All right, just to take a break from the madness here. Here we go. Crude's poking its head above 42 now. Short-term guys, you know, I tend to look at these things from longer term. And again, you know, you might be saying, okay, I've got the scanner and I got this little thing here. You know, we have broken stride here. We do have a new floor in place. You do have a chance to kind of put some leverage on possibly exploring this fair auction on the 240s down. But again, I think the you know, kind of the wait and see trade is trying to get back up into that 43.33. And again, the trend is down on crude. So, you know, what side of the market do you block out on the long-term trade, just trying to turn the rents the same way? in my opinion, you block out the long side and you just wait for resistance areas to be hit. And it's a little bit higher on the longer term trade. And I know it's hard to sit here all day long and do nothing, but that's kind of the way I'm looking at it. But again, you've got some contra little situations going on here that are not bad. Jay, that is down. If you look on the map down at places like Englehart and a place called Stumpy Point, believe it or not, there's some cool spots like in the middle of national wildlife areas, stuff like this. Let me pull this up. I'll show you if you guys care. You go down there and you see stuff like this, just nothing around. It's kind of cool. Here we go. All right, so let's take a look at IBM. All right, so, talked about buying strong stocks and selling weak stocks. This is obviously a strong stock. We talked about this crowding this area, 154.09. I think Buffett's still long from 194, but he might get his money back here. But looks like we're printing pre-market 162. So we're back up into some daily unfair highs. Remember, the trend is up. That same theory, looking for support, like there, looking for breakouts. Sometimes they work out, sometimes they don't, but the leverage is still on the long side for this particular stock. I always get an email seemingly on this stock all the time. There's some potatoes. Got those earlier this year in a large way, man. Cabbages and potatoes, they will store forever. All right, let's take a look at 3M. Then we're going to wrap up here. Massive profile in 3M on the long term here, but you've got support 176.44. I had a couple emails about this one. I think we could probably sail south on this. It's not exactly acting that well, but again, long-term trend still up on this one. So S&Ps, guys, little non-directional here. You're coming up again into 2168, 2169. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.